Hello, this is Ahram. We'll be with you with global economic outlook in the week ahead, which is going to be week number 33. As always, let's first check what we had previous week, and then we can go forward and check the week ahead as well. Previous week, right after the NFP numbers that we had week before that, which showed that the U.S. labor market is getting slightly weaker, even though the unemployment rate still steady at around 4.2%. The data that we had previous week, mostly we market focused on the ISM data, on PMI numbers, and also the Fed speakers. Fed speakers mostly they were cautious, even though they were giving some signal that the inflation and the effect of the tariffs is not still clear so far. But at the same time, they were talking about the signs of economy cooling down, as we saw in ISM numbers as well. The ISM on non-manufacturing sector, ISM manufacturing sector, and all of these surveys, they showed that the economic growth is losing somehow the momentum, especially if you look at the orders numbers in decrease, the non-farm PMI fell to 50.1 from previous 50.8. ISM non-manufacturing price index at the same time increased to 69.9 from previous 67.7. As mentioned, while the inflation is still sticky, while numbers shows that inflation is still sticky, and we expect to see the higher inflation event in the week ahead, but at the same time, the number shows that the economic growth also getting slightly weaker. That increased the chance of rate cut for at least like two rate cuts for 2025. On other markets, especially in the China, we had the export, import, and inflation data. Export and import, they were better than expected, showing that the Chinese market's getting slightly more interested in spending money, especially the domestic market. And also on Saturday, where we had inflation data, the data showed that the China inflation finally increased by 0.4% on the monthly basis, one of the best in the previous months. On the annual scale, inflation was flat at 0%. The producer price index also at the same time fell again by 3.6%, in line with market expectation, and a little bit more than in line with the previous month, but a little bit more than market expected. But the main news of the week, it was a central bank decision, interest rate decision in Britain, the United Kingdom, where we saw that BOE cut the rate by 25 basis points, as in line with expectation. But the surprise was in voters' numbers, where the 8 members they vote for. Where the 8 members they were expecting to vote for the rate cut, but only 5 members they voted for rate cut, and 4 members expect compared to one vote expectations vote for rate holding the current rate or unchanging the current rate at 4.25%. So anyway, the inflation, the rate, the 25 basis points decreased to 4% from previous 4.25%. It was what we had in the previous week. At the same time, on the geopolitical tensions, we know that there are some talks between Russia and United States that they may hold some negotiations in next days or next weeks, probably in United Arab Emirates or any or one European countries. We don't know still the place and the exact date, but that was the idea. That was actually somehow the reason that Putin accepted somehow. I can say it maybe in this way that instead of Putin accepting the ceasefire, we've been expecting that ceasefire, they accepted to. He accepted to meet with Donald Trump. So that's a little bit increasing still the tensions between the tensions and uncertainty between Russia and Ukraine. At the same time, we know that the ongoing and unsolved problems still, we have too many unsolved issues across the world. Even thought that Azerbaijan and Armenia they made negotiation peace. They agreed on a peace agreement they signed in the United States. But still, we have too many unsolved issues across the world, and that increased the uncertainty in the market. As we come for the week ahead mostly will be about the inflation numbers, as it started from previous week's last day's data from the China inflation. In China, as mentioned, what happened. In the week ahead, United States inflation will be at the center of stages, but at the same time, we have RBA or Reserve Bank of Australia interest rate and monetary policy meeting as well on Tuesday, where we expect to see RBA going to cut the rates by 25 basis points. We know that inflation is still sticky in Australia, but at the same time, we know the economic growth is getting slightly slower, especially we know that the Australian economy is so much dependent on China, not so much, but still, yeah, we can say that better say so much dependent on the Chinese economic growth, and that affecting the Australian economy as well to get slightly more under pressure. So this rate cut is expected by 25 basis point. What market is going to be watched mostly is about the central bank's expectations for more rate cuts and also about the inflation and labor market. That's where is the market's going to be focused. But on the others, at the same day in the United Kingdom, we have the labor market data where we expect to see unemployment rate to stay unchanged at 4.7% and average earnings to fall to for average earnings grow actually to slow down to 4.7% from previous 5%. That's including the bonuses. Generally, the labor market's supposed to show more weakening signal. Let's start it since we are going forward with the United Kingdom. Let's talk about the Thursday's GDP and industrial manufacturing production. Both manufacturing and industrial production for June supposed to increase slightly after May's fall. Both supposed to increase by 0.9%. At the same time, we have the GDP numbers for June, where we expect to see the British GDP to increase by 0.2% after May's 0.1% fall. In the second quarter, generally, we expect the British economy to increase by 0.1%. Out of that, we don't have too much about the China also. I've mentioned about the as mentioned. Oh yeah, the Chinese. That's also, let's say about the China. Then we can go to other countries. China on retail sales. We have the retail sales and industrial production for China on Friday, where we expect to see both of them, both industrial production and retail sales, to get slightly slower after previous week. Somehow positive data. We expect slightly bigger economic growth from the China, which is somehow confirming their second half slowing economic growth in Asia. In Japan also, we expect to see the GDP to increase by 0.1% on the second quarter. Annual GDP is supposed to increase by 0.4% after 0.2% in the first quarter, 0.2% fall actually in the first quarter. Annually in the second quarter, we expect to see the GDP growth around 3.5%. And now let's go to Europe. In the Eurozone, we expect to see the unemployment rate or labor market data from Eurozone, where the unemployment rate is supposed to stay unchanged. Employment change, let's say about 6.7%, with the employment change of 0.2%. GDP also supposed to increase by 0.1% monthly and 1.4% annual. In the United States, where is the Tuesday is very important. We're going to have the U.S. Consumer Price Index, where we expect to see we expect to see the headline inflation to increase by 0.2%, but core inflation, core CPI, supposed to increase by 0.3% monthly, which means that the inflation is still sticky. Annually, core inflation is supposed to move towards 3%, and headline inflation supposed to increase to 2.8% from previous 2.7%. Later on Thursday also, we're going to have the Producer Price Index or PPI numbers from United States, where we expect to see the PPI to increase by 0.2% monthly and 2.6% annually, confirming once again that the inflation is still sticky in the United States, and we will see how that can affect the market. We will talk more on the charts. Retail sales, that's also supposed to be published on Friday, where we expect to see the U.S. retail sales to increase by 0.5% in July on the monthly scale. Generally, the data about the retail sales is still they're positive. They're not too much negative about the sales in the United States. Let's go to the charts and see what's going on. Sorry, let me just what's going on in the chart. That's the investing.com website. Here's the chart. Yep. Let's start with the US dollar index. The dollar index, as you can see here, after 2 weeks ago, the falling in the previous months towards 96 mark, started to increase. Previous week, actually, after 3 weeks increasing, the previous weeks we saw some slowdown in the dollar index. That means that the market is getting slightly getting more cautious now after the covering, especially around 98. Now the index is thinking about it going further or not. All that depends on the inflation data mostly that we're expecting to see. Generally, what we expect is still the 96, 97, and 98, 98.50. That's the area that we expect to see as a side movement for the dollar index. But at the same time, there is a if the inflation increases so much, more than 3%, there is a chance of higher data, especially if it's broken above 98. And if the inflation gets slightly less than expected in previous months, then the lower digits could be possible. As for the gold, it's like we can say it's opposite that weaker dollar can increase the gold demand, and stronger dollar can hold or can limit the or cap the bulls that are in the market. But generally, the gold price previous week affected and get more stronger, especially after the Trump tariffs again for gold, just like for gold imports, but they are not clear too much what's going on here. We have to wait for more clarification. If we saw that, if the news confirm about the tariffs on the gold import, then we can probably see the gold price to increase. But otherwise, the probably gold can get slightly under pressure. There are too much risk around the gold. Yeah, there is a market demand for the safe havens, but at the same time, the price is so hot, and so many people they scared to buy in these levels, and they scared to buy gold in these levels. That's another risk for the gold. As for energy market, the data that we had previous week, they were mixed. In the week ahead also, we are expecting mixed economic data. While we're going to have the OPEC and IEA monthly report for the energy as well. We have to watch those reports as well. But generally, what we can see in the market that the economic growth is not too much prevalent in the market, so the demand for the oil can be slightly lower. That's why we see that the event thought after the reports that the inventories in the United States fell previous week, but at the same time the price also is lowered. That's the overall condition. But still, there are too many. If we want to see the price under $60, there are going to be more reasons for that. For now, we expect the oil price between 60 and 70, with more focus between 62, 63, and 67, 68. These areas that we're expecting to see the WTI oil price. As for the stock markets, they were positive, especially with the dovish comments from the Fed members. At the same time, we know the earnings report, they were amazing, and with the amazing data that we had, amazing exports and import, amazing production, and generally the data that we had from different country economies and earnings, they were amazing. And these amazing earnings reports, they supported the stock markets to print new records, especially for the Nasdaq. Generally, the data is still technically still positive, but on a fundamental point of view, there are some cautious, especially about such a big and fast growing numbers. That's for the stock market. Same thing for the Nasdaq, Dow Jones, or S&P 500. As for the cryptocurrency markets, there are some more correlation again between the Bitcoin and Dow Jones and Nasdaq movement, mostly because of the tech stocks. But generally, the Bitcoin also after falling down from all-time high about 120,000, now there are more demand and attack towards the downtrend compared with the uptrend. There are too many. The profit booking, taking the profit, and now the higher risk of the may fall lower. That makes more doubt on ongoing prices. People, they have to get to use with these numbers before any upturn from these levels. So probably the Bitcoin price will be again moves between 120, 113, and 118. This area that we expect to see that for the Bitcoin. Generally, not too much positive at the moment. Yeah, that was the market previous week ahead, and our expectations. If you had any other question, don't forget to write in the comment section. I'll try to get back to you as soon as I can. Have a good time. Bye.